Blog Talk Radio.
Hello, everyone in the franchise world. My name is Paul Segreto, and this is Franchise Today. Boy, it's springtime for sure, although heard about some snow up in Alberta, Canada, and in Denver this week. It really seems to be weird. I was in Denver a couple of weeks ago, and it was 80 degrees, and here we are, not out of the woods there, but I know in most parts of the country it's very warm. Joe Caruso, the co-producer of Franchise Today, is on the line from Maryland, and I know it's been quite warm there as well.
Well, I can give you a weather report from Maryland if the audience is at all interested. It's sunny, and 55 is going to be 60 degrees, and we kind of are happy with that.
Yes, I imagine you would be, and sunshine and the bright light coming down is also continuing to shine on franchising as we continue to have episode after episode on CBS Undercover Boss, and we have one again coming up with Catherine Monson, the CEO at Fast Signs, who was on our show a couple of weeks ago. She'll be coming up soon, as well as others. And speaking about sunshine and bright lights on franchising, we'll be coming up to the second Small Business Lending Summit in Washington, D.C. In a couple of weeks, and we'll talk about that here in a second, Joe, but I think it's important also to talk about our upcoming franchise legal series, our third annual one, if you can kind of give us a little bit of an update on that.
Well, we've got some recurring guests, and we've got some new guests, but we've got some excellent topics. And if we've got time, I'll run through the topics for the series. We have private equity and franchising, due diligence and deal-making with Lane Fisher, social media and technology, a moving target for franchising with Lee Plave, and Lee Plave is a great guest. Safety and vigilance, leveraging franchise sales outsourcing with Leslie Kern, Plave Cook as well. Franchise compliance basics and earnings claims, Warren Lewis, who's the author of the Franchise Seller's Handbook, and he should be a terrific guest. Litigation and technology and franchising, it's complicated, with Ken Prine. He's going to be a new guest. And dynamics of winning franchisee-franchisor relationships with Michael Webster. Michael Webster is a Toronto-based attorney, and he is also chairman of the International Association of Franchisees and Dealers. And then we will have an episode, What Do Franchise Lawyers Talk About?, the 2012 IFA Legal Symposium recap, and that guest will be announced.
Well, it should be a good series. Should be a great series, our third one. And then, of course, at the end of the series, which will be the final segment, will be the Thursday before Memorial Day weekend. Then Franchise Today will go on summer hiatus till Labor Day, basically Memorial Day to Labor Day. But there'll be some great rebroadcasts throughout the summer, probably all the legal series. So that'll take up probably the entire summer, and we'll throw in a couple here and there. Last week we had Brad Fishman on. He gave us kind of a light overview of the Franchise Unconference, and it's just an exciting time for franchising. We had a couple of big events coming up. Of course, the International Franchise Expo in New York City on Father's Day weekend in June. We have the Multi-Unit Franchise Conference coming up. Leadership Development Conference will be in Washington, D.C. In May. So a lot of exciting things. But, Joe, a year ago, franchising, finance, and policy leaders came together at the first Small Business Lending Summit to begin a dialogue to expand credit and create jobs. You and I were fortunate to have been invited and attended that event. Now, a year later, find out what's ahead in lending, job creation, and economic recovery at the upcoming second Small Business Lending Summit. And as I said, it's on April 17th in Washington, D.C. And to provide us with a preview of the event and some additional insight and perspective on small business lending and credit access, our guest today is David Nayer, co-president, COO and co-founder of BoFly, one of the primary hosts and sponsors of the Small Business Lending Summit. Dave, welcome to Franchise Today.
Paul, Joe, thanks for having me.
Well, it's great having you. It's really an exciting time. I'm definitely looking forward to things to be addressed, discussed, and come out of the Small Business Lending Summit. So, as I know our listening audience is very anxious to learn more about it, let's just jump right in. Tell us something about the Small Business Lending Summit. Why is this something that all of us in franchising should really care about?
Sure. Well, as you mentioned, the summit's coming up on the 17th, and the IFA, Steve Caldera and Beth Solomon have just done a great job of putting the summit together. BoFly attended last year. I was there with my partner, Mike Rosman, and it really highlighted the issues. And to take a step back, as we all know and should be proud of, franchises has experienced rapid growth, 40% growth from 2000 to 2010. The growth was not only in the number of establishments, but jobs created and a level of economic output. But it's also in the number of new business concepts spanning more sectors. The IFA has noted that credit access is its number one issue it faces today, and Steve and Beth have been on an aggressive campaign to bring parties together to find solutions, and that started with the Small Business Lending Summit. But they've also been working tirelessly throughout the year to bring tangible solutions to the table. What's really unique about this event, and it's something we don't see all the time, is the level of groups that they're bringing together, along with the IFA groups like AHOA, the Asian American Hotel Owners Association, and the International Council of Shopping Centers, and then banking groups such as the CBA, Consumer Bankers Association, the National Bankers Association, the Financial Service Roundtable, the ICBA, Independent Community Bankers Association, and, of course, franchise leaders like Choice Hotels, Driven Brands, Fast Signs, Bright Star, and finally providers like BoFly and Fran Data and Franchise America Finance, who are putting together solutions to the credit access issue. And it's we see it as rare that all of these associations and partners are coming together, and it's important, and it's so important that that we want to create this clear sign to policymakers that we're a united voice, and we need to fix this issue now. So we're excited to be involved in the Small Business Lending Summit and with Steve at the IFA, and looking forward to the event.
There appears to be some really big names going to the summit. If you would, Dave, tell us about who you're most interested to hear from.
Yeah, that's right. And there's several panels that are going to be available and speaking, policymakers as well as people from associations. We'd really like to hear, if there is any new policy coming out. It doesn't seem like there is anything on the table. It's an election year, but Landrew, she's on the Senate Small Business Committee. Sam Graves, who's on the House Small Business Committee. These committees oversee the SBA. We saw, with the stimulus, we saw great lending activity when the SBA guarantee went from 75% to 90%, and elimination of fees, which helped borrowers. That stimulus is gone. There's been some other policy that's been created, moving some of the caps of SBA programs up to $5 million, which helped, and including refinance as an option for 504 loans. Hopefully they'll have some more news on the horizon that we hear from them at the summit. Now, from the FDIC, Martin Gruenberg is going to be there. And, of course, we know that the FDIC regulates an enormous amount of banks. And, we'd like to understand where they are on regulatory issues. The great part is that their commitment to keep an open dialogue is there, and that's why they're going to be at the event. And we're extremely happy the IFA has bridged that gap. Now, we heard this week that there isn't going to be additional stimulus, and there's still concern. That companies aren't obtaining the credit that they need, despite some of the growth that we're hearing in the economy, recent growth. The NFIB put out a study that indicated that only half of businesses received some or most of the credit they needed in both 2011 and 2009. And really that the real dollar value of commercial loans under $1 million decreased by 17% from 2009 to 2011. And the number of loans declined 8%. So we still have some gaps here. We even heard this week from, Jamie Dimon talking in his annual report about understanding the effect or the cumulative effect of these regulatory issues that are taking place all at once. And I'm paraphrasing, but he mentioned that there's little question in his mind that credit contracted globally as a response to these regulatory issues. And small banks may be exempt from many of the new rules that are, but they're complaining that these rules will have substantially negative effect on their businesses. And he said that he intended that this was not the intended but unintended consequence. So these regulatory burdens for large and small banks have become and are becoming enormous. But maybe disproportionate burden on small banks. So really want to understand from the regulatory side what's going to be happening and how banks, how regulatory issues are going to affect banks going forward.
Certainly when it comes to a higher level of proficiency with respect to franchise finance and the various type of loans that are out there, Joe is definitely more versed than I am on that aspect, as I typically deal with issues inside the financial and legal bookends. So I'm going to ask Joe if he has any questions of you so we can move this along through the summit and then, of course, talk about some of the veterans initiatives.
Yeah, Dave, if you remember last year was kind of interesting in some of the Q&A sessions. There was a little bit of back and forth and finger pointing where the lenders were accusatory of franchisors and their franchisees of not being transparent enough and providing enough information. And then from the franchisor side of the equation, they came back and said, well, but you banks are a moving target. You all have different standards and you all want to look at different things. I would be surprised and shocked if we didn't revisit that. But what do you think is going to happen this year, and what kind of inroads? Because that was a very good discussion. There were some productive things said during it. But what do you think we're going to see this year as a result of last year's discussion?
Joe, yeah, I do remember the back and forth last year, and I'm forgetting who stood up and said this, but after the banks said that they're lending and they're finding deals, and the franchisors came and said, well, we're still not seeing the financing that we need. Someone just stood up and said, frankly, someone is lying. And within our business at BowFly, we do see some of that back and forth as well. Some banks are looking for the right deals. Borrowers are looking for credit, and there has been a gap, and it's a matter of finding solutions to fix that gap. And there's some private solutions like BowFly and Fran Data that are coming to the table with some very interesting solutions to help borrowers find the lenders that they need that are willing to lend. But when you think about what's happened with the crisis, you think about the pendulum, and we had free flowing credit before the crisis, and this pendulum has swung all the way in the other direction, where we've had a lot of pressure on banks with their lending practices. Now, we view that as a good thing. Everyone's had to really batten down the hatches and do their diligence in underwriting on loans. And of course, banks have had regulatory issues, and hopefully we'll hear how banks can start to loosen up their credit. That being said, franchising is an interesting space, and one of the things that one of the groups that we work with, Fran Data, is working on is looking at franchising as an asset class, so we can understand the risk of that asset class better, and distribute that understanding to banks and lenders, so they can more efficiently underwrite franchise deals.
Yeah, I'm a little confused though, Dave. How can you create an asset class? It's because franchising is not monolithic. It's more of a fruit basket. I mean, you've got little kiwis and you've got watermelons, and
sure,
they all fit into different classes. Will there be some dissection and channeling of the various channels or sub-channels to be able to do that?
Absolutely.
Asset classes, subclass?
Yeah, absolutely, and it could go down to industry and of course at the franchise level to understand. The great part is we have access to an enormous amount of data to allow us to do that and dissect submarkets and understand what's happening. But from what we've been dealing with is some information that is available to lenders, but not all of the information. So we want to bring everything to the table through platforms like BoFly and what Fran Data is doing to create more information to banks utilize to make a better underwriting decision.
Do you think that is any headway being made on having a uniform, universal loan application for, say, 7As, SBA 7As, and then SBA 7As with a 504 and maybe a CDC, and that they're all the same, so that the prospective borrower can now shop that loan?
It's a great point, and it's akin to what we've been doing at BoFly in creating not only a universal application process and loan package, but a competitive marketplace. And when you look at other markets, both buyers and sellers of a product or a security or even things like cars, they've been able to establish a market and understand what their market is. So, for example, cars.com, you can sell your car on that and get multiple bids back. The disadvantage the borrower has been at forever, is that they have not had a competitive marketplace, and that's really what we've built at BoFly, while taking lender preferences from lenders to understand what their credit box is on a dynamic and ongoing basis, and allowing the borrowers to understand that while they package their deal. So it's important that as we move to some of these solutions in both getting information to borrowers and lenders, that we do give the ability for lenders to provide their credit box and loan parameters, as well as borrowers to understand that while they're applying for financing, without having to go from bank to bank with hat in hand, trying to find the right loan.
But do you think, though, that the bankers will ever agree setting aside their loan parameters, what they look for, the details of a loan, the loan package, the submission package, do you think they'll ever agree on what those standards are so that you're not having to reinvent the wheel with each lender, aside from using your services at both lines?
Yeah, I think we can get closer and closer to that. Of course, banks have compliance issues that they have to deal with, and each bank kind of operates on on their own standards. So it's something I think if we have this joint force and things like the Lending Summit where we have banking associations as well as franchisors, that we work together to get that standardization, so it is easier for borrowers and lenders alike.
Yeah, one of the conversations at one of the tables I was participating in last year at the Small Business Lending Summit on this very topic, one of the suggestions was have a standardized package, and then to manage the individual bank's parameters and requirements, have a bank addendum that would have that additional information over and above the basic package.
Yeah, and that's really what we do here, and we can talk about this a little bit later. But that's standardizing the package. Now it's as we know, it's not rocket science, but it's something as a first time borrower, even someone who's owns multiple units. They have to go back to that. The understanding of what a bank is looking for in the bank language. So that's really what we focus on here, is getting that borrower, lender, or bank ready, so that they're not kind of feeling their way around in the dark. And then the banks, of course, may require additional documentation, but a standard package, a full documentation package, is to a degree is fairly the same across banks and lenders. Now, depending on the product offering, an asset-based lender may look for other things, and of course, if there's real estate in the deal, there's going to be additional items needed. But really, we want to prepare these borrowers early on, so that when they start working with the lenders, they have all their ducks in a row, and can really move the origination process along faster.
The person that I think you were referring to that stood up and got quite red under the neck was John Luther from Dunkin' Donuts, and now, of course, the current IFA chairman. So I anticipate that John might be a little bit more vocal this year as well, and probably rightly so. But all in all, I think it's all for the good of franchising. I think it will all be constructive conversation and discussion, and something that obviously is not going to be so black and white of a starting and stopping point, because I think this is going to be a continuing conversation for years to come, for sure. Agreed.
I think we need to get the issues out on the table, and push both sides for work and solutions to this issue. And we want to bring efficiency to the table, even in markets where credit is flowing well. Let's build the efficiency now, so that it'll benefit borrowers and franchisors and banks and lenders on an ongoing basis.
One of the things that seems to have been a common denominator, if you would, a common theme in all the segments we have had on Franchise Today about franchise finance, small business lending, and credit access. And we've had Daryl Johnson from Frandad on. We've had Ron Feldman, CEO over at Franchise America Finance. We've had Bob Coleman, the publisher and editor over at the Coleman Report, and that common theme or the common term that was used in 5 or 6 different segments was all about common sense. And it seems that, if we go back to, as you said, when credit was flowing, maybe we really didn't have that common sense practicality on the table. I mean, certainly that was a lot of the case on the residential lending, and certainly is probably the case in commercial lending as well, where people were definitely borrowing over their means and probably didn't have quite the plan in place in order to satisfy any balances of loans moving forward. With that in mind, and of course we hear a lot about, restrictions and this is going to be tighter and people are going to have to produce more in the way of documentation and there's going to have to be solid plans behind it. In your opinion, how much does common sense really play into all of this to make what appears to be a very complex situation really quite simple?
Yeah, I agree. It's common sense is a huge common denominator, and I think if we look back, and we're former lenders, we ran a very large non-bank SBA lending company, and so we were right in the middle of a time where there was low doc and no doc verification, and lending at very high loan to values, and basically skipping over a lot of underwriting that was necessary, and we held to our underwriting standards, and and made good loans. But what happened is competition came in and lenders popped up left and right, and lenders that really shouldn't have been lending and didn't have the experience to lend. The banks that maintained their underwriting practices and they didn't go out of focus on new industries or into industries that they didn't understand, and really to try and keep up with the competition coming in were the banks that are still in business. I think long gone are the days of low or no doc underwriting. Hopefully that will never come back. We see that underwriting has improved greatly. The banks are looking for information, and we want to provide that information for the banks. Let's everyone get smarter about making loans to small businesses and franchises.
Well, it definitely makes sense, and it definitely makes good common sense. I saw an episode last night on American Greed, going back to, again, talking about the residential financing crisis, where there was a gentleman in Hawaii that was actually doing bridge loans to cover the gap on people's credit reports on amounts that were due and not reporting, and before you know it, millions of dollars are lost. Certainly we don't need those type of situations again in the future. We're talking today, this is Franchise Today. We have a Small Business Lending Summit preview. Our guest today is Dave Naylor from BoeFly, one of the primary hosts and sponsors of the upcoming Small Business Lending Summit. As well on the air with us today is Franchise Today co-producer Joe Caruso as well. And, Dave, Joe and I recently had a segment on Franchise Today with Lonnie Helgerson of the Helgerson Franchise Group. And as many in franchising know, Lonnie is very, very involved with VetFran and all kinds of veterans initiatives in franchising. And, of course, we hear a lot about it. Dina Dwyer-Owens, who was a previous guest on the air. I know the Dwyer Group has done a lot with veterans and franchising and doing a lot to this day with some new programs running out, as well as many other franchisors. Now, I understand at the upcoming Small Business Lending Summit, there's actually a panel covering veterans initiatives, and I understand there are things that your company, BoFly, is doing in this area. Can you give us some insight into that?
Sure. Yeah, there is a panel at the summit, including Steve Greenbaum of PostNet and Beth Solomon of the IFA, as well as Mike Haney of the Institute for Veterans and Military Families at Syracuse University. So we're looking forward to that panel. VetFran has been a great program, and as you know, we know that franchisors have been participating and do things like knock down their franchise fees for veterans. And I don't think there's any question that veterans and returning veterans, with the training that they have had with their military services, are great candidates and can be great candidates for franchising. Extremely diligent, hardworking, and we've seen veterans financed through the BoFly platform, and it's an honor to give back to the veterans. BoFly is committed to VetFran. We give free access to veterans coming through VetFran. And we're also working with two groups out of Syracuse University. One is the Burton Blatt Institute, and they help people with disabilities, including veterans, in training and support. We're also working with a group called the Entrepreneurship Bootcamp for Veterans with Disabilities. And we're actually helping these groups, specifically Burton Blatt, with a grant process to help disabled people get into franchising, with a focus on training and capital access issues. Now, one piece that has been worked on a bit, but is a key piece to the to working with veterans, is that there's been an equity gap. And we need to fill that gap. We've seen a group with some crowdfunding. We think that's a great step. BoFly is actually putting together an equity fund to bridge some of the equity gap with veterans, and that's going to be rolled out over the next several months. And we're extremely excited about the fund. We're committed to the Veterans Initiative and working with the IFA and the groups out of Syracuse University to really push this forward.
It definitely is a good initiative. Joe, did you have any particular questions with respect to the Veterans Initiative?
Not really. I don't have a lot of anything really to add. I'm very happy to hear that the component for the disabled veterans. I think that something that's near and dear to my heart, and these people have sacrificed and suffered a loss, and I think we need to do something for them. And I'm very appreciative of what you're doing to help them, Dave.
Thank you. Yeah, we just a kind of side note of we have a veteran out of Las Vegas who was a 20-year veteran, came back from overseas and was in a short banking career, and then lost his job, and actually decided to open up a Quiznos restaurant. And he came on BoFly and was able to obtain an SBA loan. And it's just stories like that, and being able to help is important. But we're going to see a lot more veterans come home and out of work and looking for work. And again, they're just great candidates, and we want to do everything we can to help.
And Joe, I definitely agree with your sentiment on dealing with and helping out the disabled that have served this country. And I also know that private sector solutions is another part that you're passionate about, obviously in a different direction than being passionate about helping disabled servicemen. And Dave, I see that your partner Mike Rosman, that Joe and I also met last year at the summit, is on the panel discussing private sector solutions. So can you give us a sneak peek as to what he might be covering on this?
Sure. For one, Mike Rosman is going to be talking about BowFly and what we do. But really, he's going to be diving into how franchisors are stepping up, and we've seen an unbelievable response over the last couple of years by franchisors. So when you think about the support that a franchisor provides for franchisees, site selection, marketing, systems, training, financing has been pre-crisis was kind of on the back burner for some franchisors. Maybe it was, here's a list of lenders. Maybe there were some program lenders that were available, but now that's not good enough. So, Mike's going to be talking about how franchisors are taking an active role with their franchisees because they need to get financed. Otherwise, the franchisor is not going to see any growth. Now, to further that, and I hit on this a little earlier, and Joe, I think you hit on this as well. There has been no competitive marketplace for the borrower. So when you think about a competitive marketplace, what do we want to happen? We want the franchisee to get the best terms and rates for their loan, the best products, the right products. Is term debt the right product for what they're looking to do? Is a line of credit the right product? Does it fit the assets that they're looking to finance? So when we created BowFly, that was one of our biggest concerns. How do we, what we're providing for the franchisee is that competitive marketplace so that they can compare products across lenders and choose the right product that's right for their business. Now, what does that mean down the road for the franchisee? It means that they can get better terms and rates. That means that their startup, if it's a startup franchise, they're going to get to break even and profitability faster than they would if it had been a RON product or at higher rates or different terms. For an existing franchise, it means that they could get more profitable, if they're in the right product. So it's something that franchisors have really taken to. It resonates with them that their franchisees need to have access to not just a handful of lenders, but thousands of lenders, because frankly there are thousands of lenders. It may not be the bank down the street that is going to lend to your franchisee. It may be a national bank. It may be a non-bank lender. And franchisors are understanding very well that you need this marketplace to do it. Further, I think Mike will be covering, in conjunction, the information aspect of how BowFly connects parties. It's not just here, Mr. Franchisee or Mrs. Franchisee, meet Mr. and Mrs. Banker. It's not as simple as that. It's let's empower the franchisee to build that lender-ready package. And what goes into that? For different types of deals, and what is important for the lender to see now? What do they want to see in the FDD? What do they want to see in the bank credit report produced by Fran Data? And really get that borrower to understand that they need to speak the lingo of the lender, and that's important. That's something that the franchisors. We have over 100 franchisors that are subscribers to BowFly, and we work with them. Work with them and their franchisees. They get it. They may not have the resources in-house to train and support their franchisees to get lender ready. But now, with BowFly, they have that solution and the support from parties that that are going to help their franchisees getting lender ready.
Dave, I was excited to hear that the Asian American Hotel Operators Association is a sponsor of the summit this year, and I'm excited for a specific reason. It's a case in point where the AHOA people and the IFA don't always agree on things. But on this one matter of credit access, they absolutely agree that it's important, and they put their time, energy, and money where their mouth is to be able to help the IFA and the NRA and the rest of the other sponsors in improving the credit environment. You're also working with AHOA. How did all of this come together, the AHOA partnership with BoeFly and also coming in on the Small Business Lending Summit?
Sure. Well, first, we've established a strategic alliance with the IFA, and that was to establish key solutions for their members to facilitate credit access. And it's not a surprise that along with policy, we need private sector solutions, and BoeFly is just that, making lending more efficient for both the borrower and the lender. And AHOA, has become increasingly more involved. They're a progressive group. AHOA has 10,000 plus members, and they operate over 20,000 hotel properties, which represents 40% of the hotel ownership in the United States. So this is a big group. The issue that hoteliers have is that lenders are hot and cold on hotel finance, and so if you look at finance in general or lending in general, hotels have been hit pretty hard, and they're feeling that heat. So AHOA is joining the Small Business Lending Summit. And even on the AHOA website, their chairman was there's a clip of the chairman with Obama, and one of his questions was about credit access. So it's an important issue for them. I was actually down in Washington 2 weeks ago with AHOA, prepping their board, and they have a group of about 100 ambassadors across the country within AHOA. These are hotel owners and members of AHOA, because they were meeting with their congressional members on the Hill. And we talked about, some of the SBA lending programs and product extensions and things that they need to discuss with their, and ask for with their congressional leaders. They're a progressive group, as I mentioned, and we're looking forward to working with them at the summit. And we're ramping up our negotiations and agreement with them now, and we're excited to be working with them and their hoteliers in getting them in front of more and more lenders to get the financing that they need.
Yeah, they've got some terrific leaders over at AHOA. C.K. Patel was their chairman of the board, I think, back in 2010, and I was at a conference with C.K., and they are really a tight-knit group, and 10,000 hotel operators that virtually nobody in the mainstream even knows about, that are really a force to be reckoned with, and they're very well-intentioned and doing great things.
That's right, and I believe Fred Schwartz, their president, is going to be on one of the panels at the Small Business Lending Summit.
Definitely some good stuff. Tell us about your alliance with the IFA. What was the reasoning for doing this?
One of the groups that before we actually started and built a platform for franchisors and franchisees within our system, we had franchisees coming in through other means using the platform, and we started to get calls from franchisors, development and C-level people within the franchisor, who said, "Hey, you're getting our deals done, fantastic. How can we work with you closer? How can we make this a part of our development process, and how can we offer this to our franchisees in more of a holistic approach?" And that prompted us to build a franchisor platform where they can monitor the deals, not only offer it to their franchisees and subsidize some of the pricing for their franchisees, but monitor and make it a part of their development process, as it's been such an important issue. So that really prompted us to have discussions with the IFA, and as Steve Caldera and Beth have come in, they listened to their membership and surveyed their membership on what the most important issues are, and that was credit access. And so we really felt that it was necessary that we work closely with them to understand what their membership needs and wants. So that's what we did, and it's been a great start to our relationship. We've spent really the last year working with them, even before we had a formal alliance with them. But they see the need for the private sector to come in with solutions, and this portal of BoFly is really a solution that has been utilized by franchisors and franchisees, and we look to build upon this. We've even created an index with the IFA, a small business lending index, which is going to give really the health of lending to franchising. And credit access, and it's a unique data set. We have access to an enormous amount of data on BoFly and from other sources to create this index. And one of the things that we track on BoFly is lender interest, and we can see lender interest on down to a very specific franchise concept, to a deal. To an industry, to geographies, and we've built this index to help the franchise industry understand where credit access is. So, if we look back to stimulus, when the 90% guarantee went up on SBA loans, we can see a huge spike in our index. Now we're seeing back, kind of to normalized data, to see where the spikes are, what's happening in credit access. We're actually releasing the index on the Monday, the eve of the summit. So that's going to be the launch of that index. We're seeing now that we've reached a somewhat stable state after the stimulus. And again, there was that enormous spike with the SBA guarantees. Now, the IFA has also released a franchise business index, really because of the impact of franchising on the economy as a whole, to measure the strength of the franchise industry. And the franchise business index just provides another indicator of the health of the economy as a whole. And we look to have this franchise credit access running monthly and in conjunction with the IFA and some of their other indexes.
Joe, as we start heading down the stretch here and have about 10 minutes left, do you have any questions regarding these indexes?
I'm excited to be going to the summit this year and finding out what the thing looks like. And if I could get Dave to send me a preview, because it's got to be already done, I'd even like to have that.
Yeah, we can do that, and we'll have that over to you, and we can talk about the index, and I believe Mike at the summit will be covering it briefly as well, but would be happy to do that. Yep.
So, Tell us a bit more about BoeFly. Joe and I met you and Mike at last year's summit, but it definitely seems like everywhere we look, we hear about BoeFly, and I don't think it's just because you were on the radar because we met at the summit. It just really seems like BoeFly is fast becoming front and center in everything we hear about franchise finance and credit access, and certainly about the Small Business Summit, Small Business Lending Summit. So let's hear a bit about the background. I mean, why was the company founder? How does it work? Give us some insight.
Sure. Well, as I mentioned earlier, we're former lenders, and we saw inefficiencies in our business. As I mentioned, we owned a non-bank lending company, and the inefficiencies were at the very top was we saw an enormous amount of applications coming in that didn't fit our lending and credit parameters. We were sifting through a lot of application, and there's a cost of doing that. So there's a time and a cost to doing that, and that goes into a bucket I'll call cost of origination. So when you look at the lending model or how banks or lenders are profitable, there's a couple different ways. One is spread. So you have your cost of funds, you have your cost of origination and overhead, and you charge your borrowers an interest rate to cover that those costs as well as to be profitable. Some banks and lenders sell off paper for premium, and that's how they make money as well. But we saw these inefficiencies, and we had a large sales force, and if we were seeing it with a big marketing budget, then the pain point must have been on the borrower side, if not more than what we were seeing. Thinking of that borrower walking, into their bank, trying to get a loan, having to start that process, build the loan package, getting declined, having to go to another bank, getting declined again, or even hiring a loan broker. Nothing wrong with that, but that adds a significant layer of cost into the deal, which ultimately the borrower is always going to pay for. Even if the lender says we'll pay the brokerage fees, that's going to increase the interest rate to the borrower, and that ultimately affects them. So there was a company that we were working with that was analyzing our portfolio. And one of the original ideas they had was, if they can credit score small business loans, then they could create a marketplace. Well, we said to them, we think you have something, and this was actually Mike Rosman, my partner's company. We think you have something. We're not too sure about the credit score because ultimately you have to get banks to accept a credit score and make that a part of their underwriting. We didn't think we were ready to push that on banks, but we said, let's look at some sites that have created marketplaces based on preferences. So if you think about dating sites, if you think about eBay, if you think about cars.com, or even a website called HomeAway, we're seeing all of these connecting websites that allow us to do personal buy and sell personal items and business. So we said if those are creating efficiencies in those marketplaces, we can do it for small business lending. Now, the intricacies are within building that loan package because we wanted to provide real value. This isn't lead generation. We wanted to empower the borrower to understand what a bank wants and give the bank what they want, ultimately when they have access. So that's what we have. We have a dating site, and it's a dating site on steroids. We're allowing that borrower to build that loan package, and the borrower has full control over that loan package. And one of the things that we is of highest concern for us, because we know it is for the borrowers and the lenders, is security. And we wanted to make sure that everything is secure, not only from a technology standpoint, but really it's a dual opt-in procedure, or connection. So when the borrower builds his package or her package, no one can see that information. When they post it to the exchange, only non-proprietary items are visible to the lender, but the lender is able to set preferences and understand what matched to their preferences, things like geography and even credit parameters like debt service coverage and collateral coverage, loan size. We have about 10 or 12 different preferences. But when the lender's interested in that loan, they request access, and then the borrower gets the lender's information, and then they can grant access. And again, going back to that competitive marketplace, on average, loans being posted on the exchange see nine lenders requesting access. Now, think about the efficiency of those for that borrower. That borrower has built one package. 9 lenders are requesting access. They're getting terms and rates from proposed terms and rates from those lenders. They can compare and contrast, and then they can make the decision to go with a specific lender instead of that old antiquated way of going from bank to bank for their loan.
Joe, any questions about BoeFly you'd like to ask David?
Sure, Dave. How does who pays for it? Do the lenders pay? Do the borrowers pay? Is it a combination? What's the fee structure?
Sure. The fee structure is, and again, we've built a scalable solution. So we don't, as a company, need to make what a broker would typically make as 1 or 2% of the loan. Again, we wanted to eliminate that cost layer for both the borrower and the banker. We charge borrowers a one-time fee starting at $99, and it can go up to about $500, depending on the service level that they're looking for. Now, for franchisors and franchisees who are part of the program, those fees can be discounted to the tune of 20 or 40% off of our retail pricing. So it makes it very affordable. A franchisee could be paying $50 to be on the platform. So it could make it's very affordable for borrowers. Now, on the lending side, we wanted to do the same thing. We didn't want to create a barrier to liquidity by charging lenders high fees. We charge lenders $55 a month, and it's peanuts for lenders. But we wanted to make sure that we have serious lenders on the platform. Now, we screen all of our lenders, of course. We look to see that they're a bank, a community or regional or national a bank. If they're non-bank lenders, we have a screening process, and they have to show us that their closing documentation and their funding sources. But really, from a cost perspective, we wanted to make it very affordable for the parties to use the platform, and we don't take any success fees or commissions on a closed deal. That really transfers to cost savings for both the borrower and the lender. The lender doesn't have to pay a commission, and they don't have to raise the interest rate. And we've had lenders come back to us and say, I've been able to reduce my fees to the borrower or my interest rate because of the cost savings that I'm getting through BoeFly. 1, because they don't have to pay a commission to BoeFly. 2, because they didn't have the months of putting a package together to originate the loan. So there's a couple ways that banks are able to pass the savings through to the borrower. I'll give you a brief success story if we have. It looks like we have a couple of minutes. We had
actually, David, we're closing in on the 60-second mark.
Okay.
This leaves us open for a future segment on Franchise Today with you and Mike. It'd be great to have you both on in the future, and I definitely appreciate you participating and being our guest today on Franchise Today, and we look forward to seeing you at the Small Business Lending Summit.
Same here, Paul and Joe. I really appreciate you having me, and look forward to next week. For the week after.
Well, it was a good show. Thank you, and Blog Talk Radio has a hard stop, so they're unforgiving about the time.
Yeah, they are. Until next week, join Joe and I as we launch the third annual Franchise Legal Series here on Franchise Today. That'll run for 7 consecutive weeks, starting next week on April 12th. Until then, my name is Paul Segreto, wishing you the best, the very best in this great thing we call franchising. Franchise Today is out.
When you're part of a military family, you understand sacrifice and support. So at American Public University, we honor your dedication by extending our military tuition savings to your extended family. Parents, spouses, legal partners, siblings, and dependents all qualify for APU's preferred military rate of just $250 per credit hour for undergraduate and master's level programs. American Public University. Value for the whole family. Learn more at apu.apus.edu/military.